Hey, how y'all doing? So I thought I would plug a little futures breakdown on my YouTube channel. I know it's been a while since I've done one of these. I do it every single day inside the mentorship chat, but I'm gonna try to start giving, every now and then, start to give a forex one, a futures one, and kind of switch it up. It just makes for a really good lesson on how to, use these concepts. So NASDAQ, this is what we were talking about this morning. And the date is 12/1/2023 at the time that I'm making this video. And we're going to go over this price action from the day. So the very first thing that me and my mentees were looking at this morning. So the very first thing we saw was NASDAQ. It came up right here in London session and it grabbed Asian session highs first. So I noted this. See this right here, this push up right here, which ended up being a fake run right here. It came up and it took out that liquidity. And at the same time that it did that, guys, it tapped up and it found resistance off this bearish imbalance right here. See how we got 1, 2, 3, 3 candles, nothing but body in there, leaving an imbalance. So it took Asian session highs and it traded up into a bearish imbalance, causing that rejection lower. We identified that, okay? And what we saw after that happened was we saw a flush lower. We saw a displacement lower. Now, you can see it in hindsight, it had that push up, but my original thesis on this today was bearish completely. So yes, it's ramping up now. We can see that in hindsight that it's ramping up, but my original thesis was bearish because I'm going off what the trend is telling me. And even if your bias on the day is not completely correct, that doesn't mean you can't make money. That doesn't mean that you won't get nice setups. And I'm going to show you that here in a moment, because we actually got several nice setups on NASDAQ this morning. And one was a buy setup, even with the bias being bearish overall. One was a buy setup and one was a short setup. So what we saw though, right here, as we took Asian session highs, we tapped into the imbalance, we get a flush. This is a nice displacement right here on the 1 hour chart. See how we created fair value gap confirmation in here? That's the signature for a shift, that and the close. So we get the fair value gap confirmation right here, and we crack these swing lows, and look at the sheer conviction. Look at the sheer conviction that you see this candle close with beneath these levels right here. Each candle tells you a story, and what that candle tells me is conviction. What that candle tells me is something that wants to move lower. Because ain't no signature for no stop run right there. Underneath these lows right here, heck no, that ain't no signature for no stop run. That's something that wants to move lower. So I have this level coming into the bell because this level was formed right before 9:30 equity bell. So this right away was a point of interest for me and my mentees on which Friday at the time that I'm doing this. So the day, which is Friday, because this is serving as a draw on liquidity before it came up and rebalanced it, because this is an area that was not efficiently delivered. Let me actually zoom back and go in replay mode as well. It'll clean this up a lot more. I don't want you to focus too much on all that crap right there. I want you to focus on the price action right here. So that's an area that was not efficiently delivered. It's an imbalance, and we understand prices and like to leave areas like that. And now we're coming lower here. Now, what ended up happening at the bell was we actually didn't push up into this area first, which is fine. I'm not in the game of predicting. I'm in the game of reacting and setting my levels and waiting. That's my job. And what I noticed, we had something else down below. We had another key level in here. What is this? We have a 15-minute bullish imbalance down here. So really all I'm doing at the bell here, guys, is I'm not, trying to act smart like I know exactly where price is going to go. That's a loser's game. My job is to set my levels and wait. Be patient. Like that lion waiting in that bushes for the gazelle to cross its path. I'm patient until that happens. Then I'm on its neck, right? That's what I'm doing with this. Like that is the mindset that I take with these setups like this. What ends up happening first is we don't push up higher. We actually sell off. Look at that thing. Look at that big candle that we saw going down right there. Now, you see it now that it wicked up, but you could see it at like a very quick moment. Look at all that candle that we had on that. Like this wasn't, you see the wick now, but at a certain point, that was all red candle in there. Really think about that. Imagine with me, because this is what was happening in real time. This thing was expanding lower right here, and we had this entire thing filled up with a big red body of that candle. It looked extremely bearish, selling off with aggression, with strength. What do you think is going to occur whenever that scenario happens? What do you think is going to happen as a result? Because this thing's been selling off for a while now at this point. It's been consistently putting in lower highs, and it's consistently making new lows in here. And then at 9:30, it pulls the rug and it sells off with aggression. What do you think is going to happen? Existing shorts and even new shorts that are getting into play, they're going to want to, where are they going to keep their stop at? Where do shorts keep their stops at? They keep their stops above resistance. What is resistance? Resistance is an area where prices failed to move higher in the past. Where's your next key level of resistance on this thing when it's coming down right here? And it's just to rebalance this entire 15-minute price action right here. Completely. Think about that, guys. This is at 9:30, which is prime time for fake runs. That's prime time for turtle soups. 9:30 is prime time for turtle soups, for fake runs. And you're having this explosive move, this panic move right at 9:30 that's rebalancing this price action right here completely. It's completely efficiently delivered now. And you have not only a 1 hour draw on liquidity up above, don't forget that. Don't forget we still got that 1 hour draw up above that wasn't efficiently delivered. Price isn't going to want to leave it like that. We have that still there serving as a point of interest. We have equal highs up above. We understand that equal highs are not left like that for long. It's too clean. It's going to get taken. We understand we're putting ourselves inside the mind frame of a short who's already in this play, who's looking for lower prices. We can understand that they want to keep their stop above the next level of resistance, which is right here. So I want you to put it all together. Put all these puzzles, put everything that I just told you together. We understand 9:30 prime time for the turtle soup. We rebalance this price action. We have equal highs up above. We understand there should be a bunch of stops right there. We have an imbalance of above service of draw. I mean, overwhelmingly, you got so many signals in here. And also another thing, kind of to rewind a little bit, we were talking about this level in chat as well. I posted it in the futures analysis section when it was coming up into this level right here, up in this area. We were anticipating lower prices earlier this morning as well, because this is it's your breaker block. See this right here? That's your ICT breaker block right there. So even right here, when we were pressing up to this level, coming into New York session, we were anticipating lower prices off that. And it actually gave a nice little lower time frame scalp setup before the bell as well that we were talking about. But I'm going to focus on the equity bell right now because that's where the bulk of the volume is. So back to what I was saying, we get this move lower. It rebounds this price. What are we looking for now? Well, what I'm doing now is I'm going to the lower time frame chart and I'm looking for a reaction. I want price to actually tell me that it wants to respect that level as support. It's completely rebalanced it now. We've identified that there's equal highs up above serving as a draw on liquidity. We understand it's not going to get left like that for long. We have a 1 hour draw on liquidity up above that wasn't efficiently delivered. Discount marketplace, 9:30 turtle soup right here, down into that imbalance. Put it all together. And now look at this. We have a lower time frame shift in market structure to the upside. We have a short-term high right here. It cracks that short-term high with aggression, with strength, fair value gap confirmation. Look at that. Now what I want to see next, I want to see a pullback into a discount marketplace, which means below 50% equilibrium of this price range. Do we get it? Let's plot our Fibonacci on there now. Fibonacci from the low of the displacement range to the high of the displacement range. There's 50%. Let's see if it can pull back into a discount. Pulls back into a discount, ramps up, takes the highs, cleans out those equal highs, and then it taps up into your imbalance and it completely rebalances that 1 hour price action. Look at that. So that's what happened, guys. That was the case. We had a lower time frame trend, a lower time frame change in trend right after rebouncing that price action. Okay. We got the original move lower right here. This move lower right here, it came down. It sweeped these lows right here, which is what? Which is external range liquidity. We rebalance this 1 hour price action completely as well. And then after we sweep that external range liquidity, and we also tested an order block down here, what does it want to do next? It wants to retrace. It wants to seek internal range liquidity, which is this imbalance up here. That is internal range liquidity within that range. And then by utilizing the lower time frame market structure, by utilizing time 9:30 at this point, because it's prime time for that turtle soup, by utilizing our key point of interest right here, we can anticipate, we can time that move up into that internal range liquidity right there. We know 9:30 is prime time for turtle soup. We have a key point of interest. It rebalanced it at the bell, right at the bell. We have equal highs. We got the draw right here. You can put it all together and it makes for one big, nice picture. It all connects at the end. And that's what we saw playing out. Now, after we rebalance that price action, after we take these buy stops, after we come up and we test this breaker block again, I'm no longer interested in no buy setup on that. No way, Jose. I ain't interested in no buy setup because overall it's still bearish at the time that we're looking at it. It's bearish and now it's pressing up into a lot of overhead resistance. So after we come up and we test this level, what am I looking for next? I'm looking for the same signature. I'm not trying to predict that this is going to be the absolute top. I didn't know if it was going to respect this level or not. You know, most traders, a lot of traders, they can't even admit that to themselves. They got to act like they know exactly what price is going to do next because for their ego. Okay, and that's what sells their courses. But I can say I don't know what price will do next. I don't need to know. I still make money on a consistent basis without knowing exactly what price will do next. You know what I do, guys? Just like I was using an analogy earlier of the line waiting in the bushes, waiting for that to sell. That's what I do. But I set my levels and I wait. I'm patient. And I let price tell me. I let price talk to me. I let it tell me what it wants to do. I let it tell me if it wants to respect the level. Sure, sometimes you're still going to be incorrect and it's going to be a fake out. I get caught in fake outs sometimes. I can admit that. There's nothing wrong with that. It doesn't make you a bad trader. It just means sometimes you get it wrong. But when I have all these signatures lining up, everything that I teach you, you're going to be correct more times than not. And that's all you need. That is the definition of an edge. That's the definition of it. An edge is not one scenario is certain to occur over another. That's not what an edge is. An edge is simply when one scenario has a higher likelihood over another scenario. That's all an edge is. And if you consistently execute that edge over a large series of trades, that's where you come out on top. All right. That certainty doesn't exist here. Quit searching for it. It doesn't exist. Play the probabilities. Trading is a probabilities game. So not to get off the charts too much here, just a little psychology lesson, right? But what we saw was we came up, we rebounced this price action. So now I'm looking for a reaction. So we come up, we rebounced it completely. And I'm still bearish, remember, because this 15-minute trend is still bearish. And I want to note this right here, because this is the draw now. This is that draw down below that I want to see it take after we get the shift. Because right now I'm not really interested in messing with it because I don't know how much higher it's going to extend. Yeah, it's pushing up into resistance, but it could just keep pressing up through that resistance. So I want it to actually tell me that it wants to move lower. All right, it has a swing high put in, but there's no shift yet. It puts in a short-term low right here. See how it printed that? Look at that. Lowest low in the middle, higher low on the left, higher low on the right. It puts in a short-term low. What's next? We smashed that low. We cracked that low. Now I want to see the fair value gap confirmation. Look at that right there. It's not a very big one. It's not the greatest move. And I stated this very clearly on mic when I was talking with my mentees on Friday. It wasn't the best move, but it was still a valid setup. And I say it because it's just not a huge displacement, but it gave the confirmation signal, and you had a ton of overhead resistance. And the risk reward was phenomenal as well. Absolutely phenomenal risk reward if you were to target that low down there, which is valid, which is right here. It's phenomenal risk reward, which I'll demonstrate here in a moment. But there's the imbalance right here. Let me put on there a little bit better. And that's at that point that this candle closes and we get that confirmation signal, that imbalance, you could look for a short when it moves up into a premium here. I mean, just think ICT 2022 mentorship. That's the entry pattern, okay? And then it pushes up into a premium. It pushes up and it gives you optimal trade entry as well. There's your opportunity to get long or to get short. That's your opportunity to get short and look for lower prices now. It's confirmed. May I remind you, the 15-minute is still bearish, guys. We have that outlook. Look at this thing. That's just a stop run. It's literally just a stop run, taking out these equal highs, rebouncing that price action. Think about that. Think about all the resistance that you're pressing up into when you're doing this. You rebalanced that 1 hour completely. You're testing a ICT breaker block right here. You're sweeping buy side liquidity. And it's still bearish market structure. Price is going to move in the direction of least resistance. And then you have this shift, and that is price tipping its hand to you. Listen to the market structure. That is price tipping its hand to you, and it's telling you we're ready to move lower now. We've completed our objective of rebalancing that price action, sweeping those stops. Now we can continue the trend to the downside. And the next low, remember the 15-minute market structure is bearish. Where's the next drawdown? Right here, because it's bearish. You could shoot for that low because it's bearish. Because you're trading with the overall trend, guys, you can shoot for this low right here. It's not super aggressive. It's just there. You're not forcing the risk reward on it. You're not being too ambitious with your profit target right there. It's just there. It's available to you based on the market structure. You're not forcing nothing. It's just there. So what would the risk reward on something like that be? Let's just say, and of course, if you waited on like optimal trade entry, you would have got even better. But let's just say you got in short at a premium, and then you would keep your stop above the high of the displacement. That's how you go about doing it. And let's say you did this. That's almost 3-to-1 risk reward on that play right there. Almost 3-to-1 on that. Guys, you don't got to be right much with a risk reward like that. You don't got to be right much at all, and you can slam it out the park. You could clean up, okay? And think if you're patient enough to wait for these opportunities, and they present on a consistent basis. Maybe not every single day, but they present on a consistent basis. You'll get a few setups a week. And that's all you need to build a career. And you don't got to be right that often either. But if you have all this stuff lining up, like the trend, you have your point of interest, you have the shift, you have all these things lining up, like you can make it happen, guys. You can make it happen if you just exercise patience. So that's just to showing you like what was available to you. If you waited on optimal trade entry, which let's just say is probably around this area, just right above the 61. So that's optimal trade entry, you're looking at over 4-to-1 risk reward. Over 4-to-1 risk reward, guys. And again, that's not being too ambitious. It's just there. A lot of traders, a big problem they have is they're too ambitious or not too ambitious. Like they force the risk reward ratio on the chart. They'll force something for the sake of having a big risk reward ratio, and they don't play the structure that's in front of them. Right here, you're not doing that. You're getting good risk reward, but you're also aligned with the structure. It's providing you with that. You're not forcing anything. You're trading with a 15-minute trend. You took those buy stops. You got this shift. It's confirmed. You have time backing you. And now you have this low down here serving as a draw. And that's just available to you. And if you consistently execute something like that, you'll clean up. Okay. Again, I can show you setups like this. I've given several models on my YouTube channel. But of course, watching videos of me doing it right here, and then actually executing it on a consistent basis is a different story. And it goes back to psychology, which is more important than the technical side of things, right? But it doesn't change the fact that if you actually could exercise enough patience and discipline to consistently execute stuff like that has all this stuff aligned, well, then you're going to clean up. You're going to clean up. It's just, a matter of letting the law of large numbers take place. So then, and you don't even have to shoot for this low down here. You could just shoot for this low hanging objective right here and just take a simple 1-to-1. There's really nothing wrong with that either. Or get into optimal trade entry and just take it down to this right here, because that's just like the low hanging objective, that low hanging fruit right there that you could take. There's nothing wrong with that. It takes it out fairly quickly, and then it ultimately comes down and it hits your profit target right there. And look at how much you could have milked off that. And again, it was valid. It was a valid profit target. So we got the little setup right here, and then we got the short setup right here, and just clean setups all around. Now, of course, that last push right here, you had news to assist it, so you really shouldn't even been on board for this one. And I told my mentees that. I said, don't even be messing with this. It's bullish. The price action is bullish, but news can be unpredictable. So, but this second setup right here was valid. News was already done with at that point. You didn't have to worry about anything, or until Powell was speaking a little bit later, but it took out that low before he was speaking. So you were in the clear on that one. But yeah, guys, that about covers the breakdown. Hopefully you enjoyed. If you want some more videos like this, if you enjoyed it, leave a like, subscribe to the channel, and I'll make sure to put out a little bit more price action reviews like this.